All right. All right. Good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for August 27th, 2021. This is Friday night, so we will do a quick look at the market health check and then jump into the weekend report. So tomorrow morning, 8:30, the usual advanced swing trade group meets. Then at 6 p.m., we'll do the FAQs for the foundation's Q&A. That's also going to be done in Zoom as it stands right now. And then 8:30 we'll do. Tomorrow we're going to do the charts of interest also at 6 o'clock. We're going to go right into it. We got a soccer match to attend tomorrow night. So I'm going to go at 6 o'clock with the FAQ. There's only a couple questions, and then we'll go right into the charts. And then we'll do that as one complete session. Just remember. All right. So taking a look now at the zoomed out at the 30-day window. So the 30-day low was way back here 30 days ago, and it's gone from 422 to 450. That's a 6.36% move. We are in a COTA 2 entry that has survived contact all the way through here. It is possible to have taken a managerial exit here and then a reentry, but because it closed higher, I keep that signal open. So we had a COTA 2, another COTA 2. Yesterday, I classified as a red day because I was concerned about that being the third leg up and that we were running out of gas. And it was a options expiration day, and the Fed was going to speak, and there was some concern that they would stop their easing. And then the disaster that is Afghanistan and the complete abdication of leadership by the U.S. Is a generational turning point. And if there was ever going to be a horrible day going into a weekend, my estimate was today was going to be that day. And I said yesterday, I would not be surprised by a big sell-off and that I expected fireworks. And so we got a really strong move, but it was in the other direction. So as usual, the market responds in a way that maximizes the pain to most people. Fortunately, all I do is follow the price. So today was a good day on the long side in the market. It had a slight gap up and then closed near the high of the day. And that's what you want. So if I'm looking at the 10 days a little more closely, that's what I'm seeing is I'm seeing the, next target up is the Z2, which is at 451.77. We closed at or near the all-time high at 450. Low of the day was just above the Z1 at 446. Where I had my stop was on for swings was already out of the market because I was out there. I said, but if you're still in, I said, I would not let it go below the edge of the river. It did not today. It gapped up. And closed strong. So if I'm protecting this, I'm putting my stop here now because I want to keep half of today's strong move. Then we have the width of the dragon. We have the spine and then the bottom end of the dragon just above today's PSAR. Monday's PSAR is going to be about at 442.5. Bollinger Band mean is still solid here at 441.3. The belly of the RL10, just below that PSAR, is at 442. So I consider all this to be yellow zone trading. I'm not going to let it get below this price level for sure. But really what I want to lock in is that price. I want to lock in that nice little wedge up to the upside. So that's my story there. All right. In the broad markets for the sectors, we had the S&P at 0.89. Working up the stack, the Qs at 0.97, treasuries at 0.68. So they almost breached back through 150. The diamonds were up 0.68 for a pretty strong day. Let's see, we have, there's the Qs. We're looking for emerging markets. There's emerging markets at 1.24. And then the Russell absolutely crushed it today at 2.8. So that's just an amazing vote of strength to the upside on the basis, I think, of the Fed commentary. That's just an amazing move on a Friday that the Fed speaks. That's just crushing it. All right, other sectors that did well. We had the tech and consumer discretionary were fractionally better than the S&P. FANGs and marijuana also fractionally better. Blended commodities, materials, finance, Mexico, lumber, oil. The other lumber at 1.9. Lithium, nice recovery at 2%. Simon Property Group, the commercial real estate, up 2%. Clean energy, moonshots, 2.2. The two ARCs, 2.4, 2.5 for genomics and innovation. Energy up 2.66. Biotech, 2.7. Brazil, 2.7. Blockchain, Bitcoin, wheat and precious, 3.6. Then oil exploration, 5.25. Now, really nice recoveries on the on some individual symbols here. So the metals had been taking it in the shorts the last couple of days. We got Alcoa, Devon Energy, U.S. Steel, Virgin Galactic, and Squarespace. TX, the steel company, up 2%. Cliff Steel Company up 2%. So a really nice recovery across the board in the steel makers and the metals. Better than the material sector, which had a good day, up 1.3. But all of the metals component of that were really strong. So we'll be looking for more recovery on Monday for all the steel makers. All right, so we had no charts posted today, so I'm going to go straight to the weekend reports. Why is it that showing? All right, so let's move to the weekend reports now. So we've got the market is still in bullish normal conditions. It is now overbought in every dimension. We have the risk Z is showing still a potential for sharp downward moves. But I would not be surprised to see that start to reverse next week on the basis of today's good performance and then some possible follow-throughs. But this is warning us to still be very careful This would be a natural place for it to find support, by the way. That would give us something like a COTA 2 with rising lows if it were to resolve here to the upside. So we're going to be mindful of that. We end up holding the July holdings, which didn't change from June. So it's still, we're still holding these. And those are looking pretty good right now. And these are the current holdings. So if nothing else changes on Monday or Tuesday, then those would end up being the holdings in the different ETF packages. Looking at the Dow in that model, you can just see the strength in Microsoft and Apple, and that is not a surprise to us. ETF 2 exposure still at 70%. That was a pretty significant improvement from last week. On the monthly market health check, this month just looks like no big deal. You would not know that there was a disaster in Afghanistan, and that the monthly low is right at just above 430, so at about 432. If you're using that as a trailing stop, the monthly low or the 2-bar low would be around about 422. But still, that's after this little sideways congestion when it had recovered from previous highs. This thing has never even looked back. That is a move that is still staggering. The 9-day health check, there was only a blip on the radar from Afghanistan, and it closed at a high. That's just as nice as you can want. And that would tell me that you want to, that is also at about 432. The spine of the dragon is where you want that. The weekly is even better. That's a rejection of the sell-off and a very strong close. So I think this would suggest you want to have your stop at about 440. Or the edge of the river would be about 438. And the PSAR would be right at 430. So you have to have one of those three as your stop. The 3-day health check, rising lows. This was actually a 1, 2, 3 entry today. I think at about 448, this is where I drew it on the daily chart. When we look at the daily, I was suggesting right here at about 440, what is it? 448. Yeah, that makes sense to me right there. In the blended monthly rebalancing portfolios, yeah, thanks, Chi Wang. Yeah, I just think I think we're just going to stay with Zoom. I'll get better at the setup stuff once I get a little more stick time on this, and I'll do a better job getting set up. But this just feels like a superior way to deliver the mail, and without the lag. That's a handy thing. So they just must have better servers. So we're going to go to webinar behind. That's actually a good thing. That's going to save me some admin money. They were charging me an arm and a leg for poor performance. So in blended monthlies, the Qs were very strong. Latin America and Brazil had an interesting week to contrast with the getting slaughtered on the monthly basis. That's really quite a turnaround. And then today's performance and the performance of the last 2 days really has given new life into the small caps. So that actually makes me prepared for a potential rotation back into the small caps, which have been lagging the large all year. This is also where that completion index, DWCPF, which is a blend of the small caps and the mids, might be really attractive. Short-term bump today in EEM, and that's about a 3-day bump, and that has really been a reversal from pain and suffering on all the other time frames. So we will see if there's any legs in that. In the ETF 22, we're seeing basically the same thing. Um, yeah. And both techs now are still pretty strong. Healthcare took it a little bit of a setback and rotated over into finance. Finance is feeling really good right now. In the ETF 32, that short move was really tradable in XOP, and the bounce in energy really a change in direction from the underperformance in all the other time frames. So we'll see if there's any more legs. And clean energy also benefited from that. And that's a reinforcement of what we've been saying about energy as a sector, that because it's driven by oil and geopolitics so much, it's possible to see longer term divergence of energy compared to the broad markets. And we also see that in XLF and XLB as alternatives to the tech heavy large caps. It's not unusual to see tech being the lead sled dog for the broad market. And when tech lags, then it's not unusual to see one or more of those alternative sectors, materials, energy, and finance, to take the lead. So that's really the case. The other thing I like to look at is consumer staples, XLP, because that's the conservative equity large caps in the S&P, and I like to compare that against XLY, which is the consumer discretionary. So as it stands right now, it looks more like discretionary is winning. Like this week, XLP is in 16th place and lost 1.3%, whereas XLY is in 10th place and gained 2.38. So this little bump from today and earlier this week is really kind of a striking difference, and that actually suggests risk on is rotating back into position. And of all the key leaders, I would say XLF is very attractive here because it's still among the top 6, and it was the dominant sector on the 1 week and the 1 month. So if we use that sort of as a way to front run, that's really the best performance consistently over 1 week and 1 month. So finance combined with today's Fed remaining in a holding pattern looks promising. So we should be looking at some of the big banks to see who the leaders are this weekend. And not surprising, jumping right out at us then would be Goldman Sachs, crushing it. American Express, pretty good. Visa, not so much. So we need to find JP. So JP Morgan, although longer term suffering, looks pretty good on the one week and 1 month. So the big banks are making bank right now. Travelers, another financial services guy, did pretty good on a monthly basis, but the weekly was not much to write home about. So Goldman and Morgan, and especially Goldman Sachs, looks pretty interesting. And if they're good, then we should be interested in FAS. Let's see, Ken H., if you can take a look at FAS on your radar this week. Let's get a chart on that one. In the sector spiders, this was the recovery in metals and mining, which had been drifting downward, but today and this week was really strong. And biotech, that's XBI. And so that would also lead you to favor ARC Genomics ARC-G. And this is not a long-term position. The energy sector really has to be something that you time with swings to be able to take that volatility on. So that's what that looks like to me. Real estate has been fairly stable, and healthcare paused a little bit, but longer term, I think they got to be strong contenders. And home builders are just quietly getting it done too, I'm noticing. All right. All of the U.S. was strong this week, large caps especially so, and tech very strong as well. So you just have to love tech right now. The S&P and the U.S. are the big winners right now. You know, the Qs and the S&P. And in the other asset classes, you'll notice real estate is really getting it done. IYR. Green and white. I like to look at these that are green and white. Was good, now great. So biotech, and this combination here of large caps, the S&P 500 itself twice, and then SCHX, which is it's a form of the Dow and the top heavy S&P. That's pretty good. And otherwise, it's the long-term dominant ones are still tech large caps. And, you know, the healthcare sector spiders looking pretty good also. That's pretty solid. So that's some clear indications for the week ahead. Here's these that are in the green, form your very liquid and then also very volatile, plus Brazil, and energy remains very tradable. So biotech, gold miners, oil and gas exploration, and regional banking. Shifting to the daily. So EEM fires on, this is a warning. It is a suggestion that EEM is a short on a mechanical. What I would do is wait for a weak market and wait for that to violate its the previous day's low. Then that becomes an interesting short to me. I would not take that short just, Ken H reports FAS is in a Kata 2 formation. That's not surprising. All right, in the Dow Tactical, or is it still maintaining pace there, Ken? It's on the should be on the Dow Tactical now. Are we good on that? I'm going to assume yes. All right, so we've got about 6 or 8 dojis. We've got no breakouts in either direction on the NDX. So the Dows have been lagging a little bit. Still plenty of good auto framers to choose from. And then some 5DDs that are available also. And those are reliable entries. ETF Tactical, just a couple auto framers. We had a slight breakout here in gold. in emerging markets, and then also in Latin America. All right, next up is the auto framer. Standard framing data here for all of our symbols that are better than 2 to 1. The ones that stand out for me, I still like 3M fighting its way back to the top. Walmart should benefit from that pause in the Fed. I'm looking for any financials on there. Not really. Yeah, so I guess there's a few auto framers that are set up. I think this is one where I think you want to get the relative strength leaders. The ones that benefited the strongest today that were close to the highs, they're not going to show up very well on the auto framer, because the auto framer needs a pullback from the 10-day high. But all the ones that broke out to new highs today are the ones that I think are most likely to continue momentum next week. So I would be more interested in the continuation patterns on things that were dominating, like the financials and the Russell. That feels to me to be the better play. Daily squeezes. I like seeing the Dow on there at 2.2 and McDonald's, old reliable. And the S&P is still a respectable 1.6. So today's move was already like the first leg up out of the yellow zone. So I take that as a positive, even though it's not really a squeeze. It does have a day one directional bias built into it. So I like the S&P, but I like the Russell more. Some key breakdowns still in play: Johnson & Johnson, Walmart, Merck, and Pfizer. So that's all your pharmaceuticals plus Walmart. And then Disney and American Express and Goldman on the breakouts. And then a lot of the, the greens in the ETFs, looking at Brazil, emerging markets, Latin America, small caps, oil exploration, gold, a big move today too. So those were I'm looking for the first column to be the ones where I'm really interested in them here, that column, to find the leaders for today. Yeah, breakout to all-time highs. That's nice. And it's not overheated yet on the slope statistic of the RL30. That's still hovering around Z1 or Z0, I should say. So that's by no means a runaway market to the upside. It's a grinding market that's showing stability and resilience during trying times. And everything else is well within statistical norms. We're actually still pretty close to a quiet market here with declining volatility. That's just a grinding upward move. And that's what it looks like as it came grinding out of this sell-off. And it's still trying to fight its way north. So you got to respect that. The grind continues. And we are just on the edge of Z1 with all of the three Z-scores of the three RLs. So they're no longer overheated. And I like that the RL90 is starting to show signs of an upside, longer term pull to the upside. So that's pretty good. All right, that's everything we got. We'll get this published and posted. So remember, tomorrow I'm going to do the Foundations Q&A rapid fire at 6 p.m. There were not many questions, and they were pretty straightforward. And then we'll go right into any charts, and that'll constitute both of the videos for tomorrow. Okay. All right. That's everything I got for us. Let's take good care, and we shall see you tomorrow. And thanks for your patience, guys. See you later.